Just a quick little update with this one here, because this is the thing. Definitely sort of got to be careful for, but again, it's just how you sort of approach it. So, like I was saying 2 seconds ago, well, a couple of minutes ago, 2 seconds in this recording world, this was the little internal structure we were looking for. That's great. We got a little trend through here. We got our little, double top here, broken through the lows. Okay, fine. Looks like, okay, yep, we're coming down. And what did they do? Right back up the top, take out the highs of it all. So basically, my feeling with this is it's not sort of, oh my God, trade's over, because most likely when you see this outcome, it's not going to continue higher. It's going to sort of come back down. But what we do now, this out of the way, is call this level down here confirmation trigger line. This one through here, make it a solid line. Now, the reason that we sort of say that this isn't dead yet, and that this is most likely going to be this trigger line, well, this is the trigger line, this is going to come down here and be the start of the third leg of this big structure, is because everything from a little technical point, from this little sort of setup here, double top, took out the lows, we've got a lower low, little bit of a back test thing, everything leads to it coming down here. But what do? Jam it right up the top here. Why would you do that? Like, if you're sort of like trying to sort of get people and sort of like, basically sort of like clear out the positions, you would be basically driving it up here artificially to hit the short stop. So the people that are going short, they're like, hey, look, we've got the structure internally. It comes down here. Textbook says I put my stops just above the highs. Whoop, okay, they're taken out. Now, why would you want to take out all the short stops first? Because you want to fill your positions there and then move down over here. And this is why we use this little trigger line at the bottom here now. So that low that we actually sort of put in at 108 is going to be our confirmation go time trigger line, because everybody that sort of got in early here because of this little structure and it looked perfect, and it was, they're taken out because they put their stops where the textbook says, just above the highs. Boom, comes up here, takes out those highs. Now we start to move down. You take out the low here now, and you're starting to enter into that sort of third leg of the structure, moving like this. So the next sort of move from here is obviously sort of looking still short, because we're still looking for that third leg. Confirmation is going to be underneath 108, and then we can start to track the little lower time frame internal structure in this downward motion to see how low it sort of comes through here. But this can be a big tell. So it's actually almost better that they did do this, because you can see the kind of games that people will play, the market will play, to sort of take your positions just by doing things by the textbook. Everything was correct here, broke the trend, lower low, back test level, shoots up another 20, $30, takes out the highs. Now it starts to make the move. I always sort of say this sort of stuff, particularly with oil is a big one, but they'll sort of take you out financially, they'll take you out mentally, and then the move will happen. And that's just what we've seen just here. So if we sort of go underneath 108, you know that this was a fake out move. And why would you be doing a fake out move? Because you know it's coming down lower here, and you want to sort of take out all that extra sort of liquidity or positions and that before we see the move happen. So underneath 108, we start to come in to confirm this leg down here, and then we sort of see where are the buyers going to come in, and we've got our three potential outcomes from the downside here.